If you ever get that feeling that we've seen this movie before, a huge tech revolution, stock prices that seem to defy gravity, and this nagging feeling that if you're not in, you're missing out on everything. Well, today we're going to look at the dot-com bubble of the 90s and compare it to the AI gold rush we're living through right now. The big question is this just a repeat, or is something totally different happening this time?
You know, they say, Mark Twain once said, history doesn't repeat itself, but it often rhymes. And honestly, that's the perfect way to look at this. We're not searching for an exact copy of the past. Nope, we're listening for the echoes, the patterns, the rhymes between then and now. Okay, so let's just dive right into the hype, because this slide, it absolutely nails the core similarity. Back in the late 90s, the market went completely bonkers for anything with a .com tacked on the end. It really didn't matter what your company sold, as long as you were on the internet. Now, let's fast forward. What's the magic password today? Yep, you got it, AI.
So let's start right there with the incredible power of a simple buzzword, because it really feels like in both of these eras, the name of the game was less about what you actually did and way more about what you called yourself.
And it really was a golden ticket. I mean, you had companies with barely any revenue, and let's be honest, even less of a business plan, and they'd see their valuations just explode overnight. That little suffix was a signal to investors that you were part of the future, a pioneer in this brand new digital world. And this is the million-dollar question we have to ask about that time, right? For a whole lot of them, the answer was a loud, clear no. The promise of making money, someday, was enough to fuel the fire, but that promise was often built on some seriously shaky ground. And here we go. This just shows you the perfect parallel. Today, AI is the key. It's what unlocks all that venture capital funding. It's what gets the stock market all excited. It just screams innovation, efficiency, and a piece of the next huge technological revolution. Man, that hype feels so familiar. All right, so we've covered the general hype. Now let's get specific. Every single gold rush has its giants, right? The companies that basically become the face of the entire movement. So let's compare the titans of tech from then and now. Both of these periods were just dominated by a handful of what everyone considered can't-lose stocks. You know the ones. They were the market darlings, the companies that everyone just knew were destined for greatness. And that led to some, let's just call them ridiculous price tags. The fear of missing out was so real you could feel it.
Okay, now this slide, this is where things just get insane. At its absolute peak, Cisco was valued at 500 times its revenue. To give you some perspective, a normal healthy tech company might trade at, say, 5 to 10 times its revenue. Cisco was at 500. Now look at today. NVIDIA, the absolute darling of the AI world, is trading at over 200 times its earnings. Again, a high number is usually considered like 25. We are talking about valuations that are just completely off the charts.
So on the left, you've got the heroes of the 90s, Cisco, Intel, the guys who are physically building the internet. And on the right, you've got today's Magnificent Seven, the absolute giants who own the current tech landscape. The structure feels really similar, just a small group of companies getting almost all of the investment and all of the attention.
But this is where the story pivots. This is where the rhyme starts to change its tune a little bit. We have to look past the hype, past the crazy stock prices, and really examine what these companies were built on. This is all about promise versus actual profit.
The whole philosophy of the dot-com era could be summed up as get big fast. The goal was to capture eyeballs, users, website traffic, market share, whatever the cost. Making a profit? That was a problem for tomorrow. The entire model was just one massive bet on a very speculative future. And right here, this is the billion-dollar difference. The dot-com companies, they were building on a dream. The AI giants of today, they're building on a reality. They already own the massive, incredibly profitable cloud infrastructure. They already have millions of enterprise customers paying them for software as a service. So for them, AI isn't some crazy bet the company gamble. It's a new, extremely powerful feature that they can sell to their existing customer.
And that right there is the fundamental difference. The tech titans of today, we're talking Microsoft, Google, NVIDIA, they aren't just promising future profits. They are already some of the most profitable companies in the history of the world. For them, AI isn't some desperate Hail Mary pass for survival. It's a powerful and, very expensive new product line, built on a rock-solid foundation of existing cash flow.
So after all that, where does this leave us? We've heard the rhymes, in the hype, and the wild valuations. We've seen the huge differences in the actual business fundamentals. So what's the next verse in this story gonna be? So let's just do a quick recap. The rhymes are obvious, right? The intense hype, that massive fear of missing out, and valuations that just seem completely disconnected from any old-school way of measuring things. But the difference is, they're profound. Today's boom is being led by companies with real, massive profits, and it's all built on a mature, established tech infrastructure that just didn't exist back in 1999.
You know, it's really important to remember this. The dot-com crash, as painful as it was for so many, it wasn't the end of the story. It was more like a filter. It completely wiped out the weak ideas and all the hype, and it cleared the path for the truly revolutionary companies, like Amazon and Google, to rise up from the wreckage and build the world that we all live in today.
And that brings us to the final thought I want to leave you with. That first bubble, the one that was built mostly on promise, it eventually gave us the modern internet. So if this new boom, one that's built on a much stronger foundation of actual profit and infrastructure, if this is really history's next verse, what's it going to build? What kind of world is waiting for us on the other side?